You should be afraid. You should be very afraid. You should get out of harm's way at the earliest moment you can. Sell all the stocks, sell all the bonds, get out of the casino, because this place is going to blow up.
Hello everyone and welcome into CrushTheStreet.com. I'm Kenneth Amaduri and I'm really excited today. We got a first-time guest on the show, but I'm very sure that you've heard of this guest. And really, it's someone I've admired as a celebrity in our finance world. His name is David Stockman, and I'm on the phone with him right now. Very excited. He's a best-selling author. He did write The Great Deformation, which articulates the corruption of capitalism in America. He's got a brand new book out with a timely title, Trumped: A Nation on the Brink of Ruin and How to Bring It Back. He's got quite the resume. Was the former White House budget director under the Reagan administration, an extremely smart economist who is on the front lines of educating people, and he's the editor of David Stockman's Contra Corner. Without any further ado, David Stockman, thanks for joining me.
Very happy to join you, Kenneth. Look forward to the discussion.
Well, let's start off with the elections and the markets. I'll start you off with this. Has the market priced in Hillary Clinton as winning already? And if Trump wins, do you suspect there to be a Brexit-type shock to the markets?
Well, I would say until about 1 o'clock Friday afternoon, the market was pricing in a Clinton victory. It looked overwhelming in the Electoral College. But after this new, commentary from the director of the FBI that the investigation is being reopened, I think we're facing something like the mother of all October surprises. This is a shocker. This is seismic. And whether it ultimately amounts to a smoking gun or not, I would say the fact that he felt compelled to inform Congress of this new turn in the investigation less than 280 hours, I just calculated it, from the closing of the polls on November 8th, indicates it must be something fairly substantial. But more than that, we probably won't know between now and then, but it'll give Trump and the whole Republican apparatus massive firepower to dominate the issue in the rest of the campaign. We had, until today, something that looked like Servergate. I would say this is now morphing very quickly into Watergate 2.0. This is going to be a prosecution like you've never seen. And even if Hillary manages to eke it out, and I think that's probable in the Electoral College, I think the markets are finished. I think we're going to see this whole house of cards, which has been built up at least since the fall of 2008, but really much longer, come tumbling down in a heap. Once the boys and girls and robo-machines on Wall Street finally realize that the game is over, the Fed is out of dry powder, they're confused, paralyzed, conflicted, they have no place to turn. Congress and Washington will be a veritable bloodbath. If Hillary wins, I think the investigations of her emails and all of these WikiLeaks and everything else will be nonstop. Multiple committees in the House. The House will become a killing field for anything Clinton is trying to do. If she does win, she will come into the Oval Office bruised, bloodied, and as delegitimized as any newly arriving president has ever been. And that means that this talk you hear from the talking heads that they put on Bubble Vision every day that, we're confident about next year because we think the baton is going to be handed off from the Fed to fiscal stimulus. I don't know what they're smoking, but it's not going to happen. Nothing will come out of a Congress that is basically fractured and, paralyzed with partisan conflict and ill will and investigations and charges. So I think there's nothing left but fumes and robo machines holding up the market. It's, hideously overvalued. And regardless of how the election now comes out, it's going to be downhill from here. If Trump wins, it means all bets are off. He has finally recognized the elephant in the room, which is the Fed. He called it out. He
sure
said
did.
This is one big, fat, ugly bubble, and this is unsustainable. Interest rates at zero for 94 months or however long it's been. So we're in a new ball game here, and I don't think it's going to take that long for the fast money to recognize that. And if they ever panic and start to unload their final positions, which frankly I think the smart guys have been unloading into this rally for 100 days now. But if they really start selling, there's going to be no bid below, and we're going to have a gap down in the market like we haven't seen for the last 6 or 7 years.
Well, to say the least, if Hillary Clinton does get into office, we're going to have more of the same. And for whatever reason, the markets tend to like that. They, when they talk about lowering interest rates, there's that upward pressure the market's seeing, and we know that's all artificial. But my wonder is, and I've heard this thrown around now for some time, is that if Hillary does get in, does she pull the plug on the system, allow everything to crash? That way she blames it on the previous administration and she starts brand new, rather than allowing it to crash on her watch 4 years into it, let's say.
Well, I think that's a good question, but I think it is, if she ekes it out, as I say, it is going to crash. It will be on her watch. And I think that's the silver lining in the pretty nasty scenario ahead, because it will be clear that the Washington Wall Street establishment that has been behind this massive expansion of the public debt, it went from 10 trillion to 20 trillion roughly since the crisis and during Obama's tenure. And this massive monetary expansion and stimulus, all of that will prove to have failed on Hillary Clinton's watch, and maybe the country will wake up and demand some fundamental sweeping change in policy. I don't think, the Fed is going to be in any position to bail out the Clinton administration if the economy sinks into recession next year, which I think it will, notwithstanding today's kind of quirky GDP number. The economy is barely treading water, something like 1% GDP growth over the last 5 quarters, even with today's number. And if you have if you had an accurate measure of inflation, it would be close to zero. So I think there's no momentum left in the economy. There's a lot of headwinds coming from everywhere in the world. China is going to, be hitting the skids over the winter and into the spring. Europe is in shaky condition. The ECB, I think, is at the end of its ropes. The Germans are saying, wait a minute, this sub-zero interest rate, negative rates are killing our savers. It is badly injuring our banks, and I don't think it's going to be an easy thing after the program expires in March. That is the ECB Draghi program I'm talking about, to expand that at its current rate. Same thing is true in Japan. So what I'm saying is we're at the end of an era. This whole thing has been inflated by a kind of cavalcade of central bank expansion over the last 10 years and is coming to an end at the BOJ, at the ECB, at the Fed. The Chinese are having a big run on capital again, big capital flight. They're going to have to tighten. They can't, crank up their printing press even more than it already has been. So we're at an inflection point, and I think it's going to take a little while for all that to sink in. And if Hillary is in the White House when it happens, so much the better, because the status quo in the established regime will get blamed. And if Trump's there, he will be thrashing around. He has no economic program. I like him because he's against the establishment and the status quo, and that's his job, to disrupt the horrible direction that we've been on for many, many years now. But he doesn't have a program to replace it, and if he's elected, it'll be, partisan warfare for many, many months and years. And again, that means the economy and the financial market will be left on their own to adjust finally and to liquidate these crazy, extreme bubbles and, this false prosperity that we've had for many years.
Well, I'd like to get your thoughts on how long this bubble can be inflated for, and I know you gave us a lot of information on it. Bush doubled the national debt. Obama doubled down on the national debt, and they were 10 trillion, now we're 20 trillion. The next president, I mean, if that happens again, we're looking at 40 trillion of official debt this next time around. I'm not sure if you believe that's going to happen or not. Maybe we'll get your thoughts on that. But the markets, I mean, we're dealing with unprecedented situations. Interest rates at 0% and negative around the world. And, we have this variable that's inflating asset prices that we've never seen before. So is it possible the markets can continue to be ballooned beyond what we would otherwise, use conventional metrics in the past to value the markets and say, oh, it's too expensive. But now we have this unprecedented variable, which is negative interest rates, causing things to go beyond what would historically be expensive. So just some of your thoughts on this.
Yeah, good, really good points. And I think the heart of it is that everything has been falsified. The whole point of QE in this massive dimension, 3.5 trillion, balance sheet expansion since September 2008, has been to artificially suppress money market rates practically to zero, to flatten out the yield curve, to push at the lowest point the 10-year yield down to 134, I think it was. And of course, in Europe and Japan, it's below zero. All of this is basically destroyed price discovery. It's destroyed balance. It's not a two-way market. It's a one-way market in which basically machines and day traders trade on actions of the central banks. There's no discounting of the real economy or of any plausible view of the sustainable future. So, therefore, you have a whole generation of people in the market who have never experienced a real world governed by, actual economic law of supply and demand and the rest of it. They've been in a entirely central bank dominated, falsified, loaded financial system. And when that begins to fracture and unwind, when confidence begins to suddenly be questioned in terms of what the central banks can do to keep this fanciful world going, then I think you're going to be in a new ballgame. They're going to panic because there are no metrics that are meaningful that would justify where these financial markets are. I mean, how can you justify owning the Spanish 10-year bond with a yield of 1%, or Italian 10-year bond with a yield, I think, of 1.2 today, when Italy is drowning in debt. Their economy has been shrinking for 7 or 8 years, and so forth. The point is, nothing is valued on the basis of real economics. It's all valued on front-running what the central banks are doing. And when the central banks finally hit the end of the road, run out of options and dry powder, which I think is exactly where we are now, there's going to be a sudden, as we call it, Willie E. Coyote moment, when all of these kids and all of these traders and robo-machines in the market are going to realize they're, pumping air and there's a cliff behind them. And that's really what's coming next. And I think regardless of how this election ultimately comes out in the next 11 days, we're entering a wholly new chapter thereafter.
Well, I can't disagree with that. But we know that the establishment is head over heels for Hillary Clinton. I mean, we saw the ABC poll where Trump was 12 points behind Clinton, and popular news outlets like CNN and even not even news outlets, but just agendas, like The Daily Show and Saturday Night Live, these programs like have a lot of viewers that are painting the conservative movement as idiots, as out of touch. I mean, they're just all in for the establishment. And, we also have social media and young people becoming a larger part of the election process. I mean, Hillary Clinton and Donald Trump are all over social media now. And, quite frankly, young people are influenced greatly by this, and they're in many ways uneducated to make a decision on what is best for the economy. And, I'm optimistic that I'd like to be optimistic that when this thing comes crashing down, that the blame gets put on the right side, or the correct side, the central banks and overspending and deficit spending and all these different things that contributed to this bubble. But I just have a feeling that the establishment is going to package this up and dump it on the free market and capitalism. And, it's rough to call, the Republican Party, free market and capitalism. I know people are going to have an issue with that too, but in general, that's what they're going to blame. So just, some of your thoughts on that.
Yeah, well, you're opening up a huge area here, and with your opening question, it's interesting about the ABC poll and the 11-point gap. Well, that was 8 days ago. The one that came out today, the gap had diminished to 3 points, and that was before this whole new revelation from FBI Director Comey. So, this is a very volatile, unprecedented election environment. And what I think is going to happen, though, is that in the end, Trump is conducting a referendum on the establishment and a, pretty fierce campaign against the establishment media. And I think that may be a good thing for the long run, because it is raising huge questions about the objectivity, credibility, and so forth. It's obvious that CNN and NBC and the rest of New York Times, Washington Post, they're totally in the tank for Hillary. It's obvious that they've been doing everything within their power to destroy Trump, not that he hasn't brought by his past life some of it on himself. But the point is, I have never seen in my whole experience, and I've been involved in politics since 1968 when I was a anti-war protester way back then as a student. I've never seen such a vicious campaign against any politician as the mainstream media has put on against Trump in the last couple months, but especially the last couple weeks. But despite that, he has not been obliterated. He had been bouncing back in the last few days, and now we're going to see, I think, a fresh start in the remaining 11 days. I'm not sure that he can overcome all of the disadvantages, but this election has kind of broken the mold, so to speak. It's broken wide open for the public to see, how much the media is basically a wholly owned subsidiary of the Clinton organization and, the ruling class in Washington. And I think, the public is not, the public is waking up. Because if the media were as powerful as you might think, Trump would have been, destroyed long ago, and he keeps coming back. I think it's a sign that the public is ready to hear, maybe a better truth about where we really stand on all these issues, both foreign policy and all the ridiculous wars we've had, as well as domestic policy and this bubble finance and this huge windfall gains to the asset-owning classes and the speculators on Wall Street, where, as I demonstrate in my book, the Main Street economy, or is what I call flyover America, has basically been losing ground ever since the turn of the century.
Mm. Well, let's circle back to the economy just for a moment here, and specifically the markets. Do you believe that the Fed will be able to raise rates in December, with the rest of the world lowering them or keeping them the same? And I would, just add to that, it was this time last year, December 2015, when they raised rates, and that seemed to trigger the markets into what we saw going into January with China. News out of China causing markets to sell off and also causing gold to rise. And I'm kind of wondering, if we do see them raise rates, if we'll see a repeat of what we saw in 2015 going into 2016 this next year.
Well, I think the fact that there's even a debate about whether we can stand more than 38 basis points on the money market rate, which is where the federal funds rate stands today, the fact that they're having that debate internally after 90 months on the zero bound, after a 7-year so-called recovery, after you've achieved what Vice Chairman Fisher says is near full employment, and you're still at an ultra emergency rate, and you're debating whether the economy can take another 25 basis points. The economy can easily take 25 basis points. It's a rounding error. There's no businessman in America who will make a decision on building inventory or investing in capital based on 25 basis points. There's no household in America who will decide to buy a car or not buy a car, or even buy a toaster or not buy a toaster based on 25 basis points on their credit card. This has nothing to do with the real economy. This has to do with the hair-trigger traders on Wall Street and the whole bubble of prices for bonds and stocks that have been created by this insane monetary expansion and inflation. So the Fed has been taken hostage by the gamblers and by the machines and by the day traders. And this is a bloody mess that these Keynesian fools have brought down on their own head. So whether they do it or not in December, I think is a secondary question. Sooner or later, you have to have normalization of interest rates. Because if you have the money market at zero forever, it means sooner or later everything else has to be at zero, or you're just going to create constant speculation and arbitrage on the yield curve. So they are in a really deep corner. It is really a kind of lunatic mess. And I think it's a reason why you should be afraid. You should be very afraid. You should get out of harm's way at the earliest moment you can. Sell all the stocks, sell all the bonds, get out of the casino, because this place is going to blow up based on the very discussion we're having. If this were real, sustainable, stable, there could be no debate this far into a cycle about 25 basis points of interest on what has essentially been zero-cost money for 8 years. So that's the real issue, and it doesn't matter. I mean, if someone is trading every 10 seconds, maybe they can watch the white of their eyes until the Fed meeting in December. But if, anyone who is a normal person needs to get out now, because when this thing comes down, there's going to be no bid under the market.
Mm. And Mr. Stockman, what do you suppose will be the trigger or the catalyst for the market sell-off with so many instabilities around the global economy?
It could be a thousand things. Everybody, there is a revisionist history that says, now, if only they had, bailed out Lehman Brothers, the crisis in 2008 would have never happened. That is so much baloney. There was a house of cards built up throughout Wall Street. These balance sheets of $2 trillion that the big investment houses were built on hot overnight money and massive illiquid assets that shouldn't have been funded that way at all. So if it's not one thing, it's going to be another. This is basically a rotten system. And, if Trump wins a surprise election, that could be it. If Hillary skates by on a tiny razor thin margin and is going to be a lame duck president from day one, that could be it. If the Republicans announce they're going to start impeachment hearings a couple days after she's sworn in, which I think is a real possibility, given they're going to be subpoenaing everything that's in all this, information that's been leaked and the emails and the rest of it, that could be the trigger. If the ECB suddenly freezes up because Germany says 9 to Draghi about extending the full scale of $90 billion a month of the current QE program, that could be it. If the yuan, the Chinese currency collapses overnight one of these days, which it could, because there's a tremendous amount of capital flight underway that they're desperately trying to stabilize. That could be the trigger. There are an infinite number of black swans that could trigger a sell-off, and if the sell-off is large enough and intense enough, the machines will sell into the sell-off. That's the big danger here. If it gets going, the machines will sell and compound, the correction, just like they have basically been buying the dips and supporting the inflation of stock prices for since March 2009.
Mr. Stockman, with essentially all major economies on the verge of collapse, and in certain cases worse off than the U.S., how long do you suppose, if you agree with this premise, how long do you suppose that the U.S. economy will benefit from being the rest of the world's safe haven as their economies collapse and they flee to the U.S., which supports our markets and our economy?
Well, I think in the short run, the money printing, the last, gasp of money printing in Europe with the ECB and Japan has probably flushed some capital into the dollar markets and has supported, in the short run, both the U.S. bond yield prices, and the stock market. But basically, if the U.S. is the cleanest dirty shirt in the laundry, and the rest of the world continues to stumble, what will happen is the dollar will strengthen, and that is the death knell for this financial bubble, because there is so much exposure to dollar interest rates all around the world that if the dollar strengthens, there's so much exposure to dollar borrowings all around the world that if the exchange rate strengthens, there will be a massive liquidation of dollar-denominated emerging market debt, even dollar-denominated European debt. There's been a huge amount of corporate issuance, dollar-based in Europe, because of the negative interest rates. So it's a double-edged sword. I just don't think there's anything sustainable about it.
Well, there you have it, everyone. David Stockman. Mr. Stockman, I want to thank you, first of all, for coming on the show and sharing your insight with us. It was a real honor for me to be able to speak with you and pick your brain here on the show. If people wanted to learn more about you, purchase your book, or subscribe to your publication, please share with everyone where they should go and what they will find.
Okay, well, the book, which is covering everything we've discussed here in our conversation, called Trump, A Nation on the Brink of Ruin, is available on Amazon, both the ebook version and the printed version. So they can just go to Amazon, and that's where you can find the book. You can Google my blog, which is called David Stockman's Contra Corner, and click on, and it will tell you exactly where to go and how to subscribe.
Mr. Stockman, thank you again for coming on the show. I look forward to sharing this podcast with all of my readers and listeners here. So again, have a great day.
Okay, great to be with you. Thank you.